And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alix Steel. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast. Scarlet Fu in Studio 2, Massar and Tim Stenovec in the radio cage. We welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. What's setting up right now, Massar, to be the broadest base sell-off that we've had all year, though on a percentage basis, not quite the worst.
Yeah, check it out, too. Jess Menton was in the studio, or the cage, as you like to call it, Romaine, earlier today, and saying the S&P 500 on pace for its worst week in 2024, and its worst week since October 27th of 2023. If that date sounds familiar, it should, because that was the bottoming, or recent bottoming, if you will, of the S&P 500, and what began a 27% climb in the S&P 500. So we're all a little bit on edge here as we watch what's going on in the Middle East.
Yeah, it hasn't been a great week, but I will remind people that we are still up more than 7.3% on the S&P 500 so far this year. We're only down about 2.6% from all-time highs reached at the end of last month. Still, geopolitical concerns do certainly have investors on edge.
Yeah, those geopolitical concerns are really hitting EIS, which is the ETF that tracks Israel, down for a fourth straight day, losing 2.8% right now. And we're also seeing weakening in the Israeli shekel as well, when everyone's just kind of on tenterhooks waiting for the headlines.
Yeah, and you can really see that reflected in gold earlier, right? You had that move to 2,400, and then we had sort of a sell-off, which, I mean, that's the point of gold. You buy it when you're scared, and then you also sell it when things get bad. So you can make the argument it's doing its job. So still part of that safe haven narrative, Romaine.
A couple of days ago, it looked like the major equity indices here in the U.S. were headed for a weekly gain, but based on where we stand right now, we're setting up here for weekly losses across the board. All right, we get the closing bells here in New York. The Dow Jones Industrial Average is going to finish out the day down by almost about 475 points. It takes a while for these numbers to settle, but nevertheless, the damage is done. Down 1% here on the day, 2.5% on the week. The S&P is going to finish lower by about 76 points, or 1.5% on the week and on the day as well, while the Nasdaq Composite down about 1.6% here on the day and about 0.5% on the week. But keep an eye on the Russell. At one point, it did trade below its 2,000 level. A key line in the sand for a lot of technical traders out there. Is going to close slightly above that at 2003 and change, down about 39 points, or 1.9%.
All right, Romaine, you said it well. A risk-off trade certainly on this Friday session. If I look at the S&P 500, folks, most of the names in the index trading lower today. Scarlet, 460 to be exact. We'll get into the sectors in just a moment. 41 gaining some ground, 2 unchanged.
Yeah, if you look at the sectors, it's pretty much red across the board. There's one pocket of green, and that would be in real estate management, but the main 11 sectors are all down. The worst performers here are materials, tech, and consumer discretionary, each off by at least 1.5%.
All right, I'm going to say it wasn't easy to find gainers, but got a little assist from my partner in crime here, Tim. So among them, first of all, an IPO, go figure. Maybe not a day that you want to begin trading, but nonetheless, UL Solutions, ticker ULS, did just that, and coming out of the gate and pretty much holding on to its gains here in its first day of trading, up 25% here. This is a safety testing and inspection company. It did expand its IPO. It raised $946 million. The pricing, though, within the marketed range, but nonetheless, out of the gate, really strong in a day where, as we just talked about, pretty much so many sectors, almost everything was down here. Also, Globe Life, Tim talked about this yesterday. It got hammered, down 53% in the Thursday trade, a record decline there. A different trade today. It was up about 20% after that sell-off yesterday. We know the news. It was a short seller, an anonymous short seller, Fuzzy Panda Research, released a report against Global Life, but nonetheless, investors coming back into that name today. Speaking of insurance, Allstate, also a gainer in today's trade, just up 2% at its highs today, finishing the day with about a 7/10 of 1% gain. Not sure why, but there were some analyst calls yesterday. Evercore, also Wells Fargo, raising their price targets on this company, so a little bit of a move to the upside. And one more name, Coupang. It's a $38 billion market cap e-commerce company, Korean e-commerce company, and it came out saying that it's going to raise the monthly fee for its WOW membership for new clients starting on Saturday, and so you saw that one really outperforming today's session, up 11%.
Okay, let's talk about some underperformance here because no shortage of stocks to choose from. I do want to start with JP Morgan having its worst day going all the way back to June of 2022, closing down 6.5%. This after the company reported that net interest income slightly missed analyst estimates, a sign that the benefit of higher rates may be waning amid pressure to pay out more to depositors. We should note that going into the report, shares were up nearly 15%. Shares up just a little over around 8% so far this year now after this decline. Hey, do you want to check on shares of chip stocks? Because we did see both Intel and AMD as well as NVIDIA move lower today. Intel fell more than 5%. AMD, for its part, fell 4.2%. This after the Wall Street Journal reported that China has asked its telecom carriers to start phasing out foreign chips. The direction went to China's largest telecom carriers earlier this year to phase out foreign processors that are core to their networks by 2027. This according to the Wall Street Journal, who cited people familiar with the matter. And then finally, let's take a look at how Boeing ended up doing today after what I think it's fair to say a pretty rough week for the company. What's that?
No, never mind.
No, 2.2% down today. Down more than 7% so far this year, or so far this week, I should say. Having their worst run, guys, going all the way back to 2018, excuse me, back when its 737 MAX aircraft was involved in a deadly crash off Indonesia. Shares down about 60% from all-time highs that were reached back in 2019.
Ooh, that is a brutal stat. I'm taking a look at the bond market here. We know there's been a safe haven move into that. The 10-year yield, for example, is down 7 basis points, a 7-year down 8. But I have to say, yields were down more earlier in the session. Also, considering that big move that we got on the front end earlier this week, where you're up at 22 basis points in one session, this doesn't feel like a huge reaction that we could have had reversing some of the earlier selling, guys.
Yeah, I think that's a really good point. And if I go back to even the equity trade today to see that we kind of bounced off our lows and saw a little bit of buying into the close, I thought that was kind of interesting. Well, yeah, go ahead.
Well, just a counterpoint to that, though, too. I mean, I think one thing that alarmed me was just how much in lockstep we saw some of those safe haven trade, if you will, the idea that you had the VIX elevated, oil prices elevated, the dollar elevated. I mean, usually when you have the dollar go up and then you usually get oil maybe go in the other direction, and then you play that in with the drop that we saw in yields and then I guess that brief embrace of gold. I don't know. I mean, I feel like this is a little bit different than maybe some of the last big sell-offs that we had. Yeah,
we did speak to Hagar Shamali earlier in our program, and she said that, look, I'm not an alarmist here. She spent years working at the State Department. She said, I'm not an alarmist, but I am very concerned right now. All that said, guys, we could go the weekend and not see anything happen.
Can I say, I actually listened to that interview. First of all, it was a great interview, Tim. And then I'm glad you pushed back, because I actually found it alarmist. I mean, her tone, and I know that, the tone that you're going to get from someone like that versus, say, an actual investor who maybe has a little bit more of a buffer is going to be different. But I did think that what she said about just the potential that this could be bigger, I guess, than maybe some of the previous incidents.
Yeah, I think escalation is certainly a concern. I mean, look, what could the U.S. do in response? And that's what she said. She essentially said, okay, well, we could see warships ending up, being deployed as a result of some sort of attack. But I think a lot of people want to avoid getting into something that could be considered, a widespread conflict.
She also, though, did also say that Iran knows its limitations and how much it can kind of push the United States. So they're going to be maybe thoughtful in terms of what kind of retaliation they do. So we'll see what happens this weekend. I mean, going back to kind of our bread and butter in terms of the markets, folks are saying, we had Bill Maloney and JJ Kinahan in here and said, again, if nothing happens, you could see investors certainly come back into the market. So we will certainly wait and see what ultimately happens and whether or not we get escalation to another level.
Yeah, so I was saying, if we don't see anything, do we get the buy the dip kind of scenario for that? Can we pivot here? Is that okay?
Can we talk bagels
That's allowed.
and some other stuff?
I'm gonna move to some of the interesting stories that maybe didn't move markets, but are quite interesting and will impact how you maybe live your life, and that's McDonald's. So apparently, guys, you know this, that because California raised the minimum wage, McDonald's wants to get more people in the stores, so they're bringing back bagels to help them do that.
Yeah, they're doing that. Well, they're dealing with this, mandatory 25% bump in pay. So they're trying to figure out, okay, we've got to figure out how do we pay for this. And apparently, although Tim and I are kind of scratching our heads, bagels were a really popular thing at McDonald's, which makes me wonder, okay, who told them to take them away, first of all, if it brings traffic in. But nonetheless, because they know this, they did a focus group. they're going to kind of reintroduce them. And they're actually doing some marketing, which is what they don't normally
Yeah,
do on a local scale.
Yeah, local marketing, just in California, spending $15 million there, which could be significant. I think a couple things to keep in mind here. One is it can end up costing a lot of money for these franchisees to pay these wages, these higher wages, $250,000 per restaurant. That's a lot of money. But everywhere is going to have to raise wages. So all prices are going to go up. Every restaurant is dealing with this.
All I have to say is bagels in California don't usually work out well. That's all.
Here we go.
We talked about this.
She would be right.
Carbs?
Bagels in New York, really good.
No, it's the water. The water.
The water?
The water's
Oh, come on. You're probably a pizza snob, too, aren't
Of course.
Yes. All right, on that note, that's a wrap, guys. Have a good and safe weekend. That's going to do it for our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We will see you same time, same place on Monday.